We are now going to explore the potential funding challenges faced by the iGaming industry in these uncertain economic times. We have a fabulous panel of experts who are going to delve into the current state of investments in the industry and share strategies for overcoming funding obstacles to drive innovation and predict who will be the ace in the pack for 2024. My dear friends, I appreciate it is getting late in the day, but we do need to bring the energy here. We have some fantastic speakers. I would like you very much to join me in welcoming to the stage General Partner at the mighty YOLO Investments. Please give it up for Julian Buhagiar. Thank you.
Hi everyone. It's the graveyard slot. I know we'll get through it. Bear with me. Just 25 minutes and we will get through. We have a fantastic panel here today. I'm going to stand up and actually welcome the lovely Martina Åkerlund. Welcome on stage. We have Alex Martin, CEO of SKS. Martin, welcome on board. Hi, good to see you. Chris Bohlmann, Esports. Lloyd Danzig, Sharp. Hey Lloyd, good to see you. And last but not least, John Karantzis of ISX. Got an audience, well done. It's funny because actually we've got quite some interesting topics today. We're talking about headwinds, we're talking about challenges, but we're also talking about some really interesting recent developments. So, first things first, I need to get something off my chest. You've probably seen on social media this week, right, that iGaming NEXT has just finished an investment round, right? It's great. There was peer press release, everyone's happy. The reality is that most of the work had been done already almost 6 months ago, right? Almost 6 months ago, so get this. But, and this is a headwind issue, right? We had two issues, right? Two issues. First off, is there anyone in the audience who either works with an auditor or works with an accounting firm? Put your hands up. I mean, guys, there's AML, right? And there's billable hours, right? It took us so long, right, just to prove where money's coming from, what's going through, let's claim this invoice of £20, where did it come from, right? And we cannot really make any transfers until it's all done, until all the audit's done, so the investment can complete. And then when the investment's done, when you've told everything about yourself, you've talked about your first girlfriend, the first car you drove, right, where you've lived, right, in the first 18 years of your life, you try and make the payment, right? And then what happens? Then the banks say, sorry, we're not going to let this payment through because you haven't completed Form A1, which actually shows about AML or KYC. So the whole process, right, has taken effectively more than 6 months, which should have probably been less than a month, right? That's one of the biggest headwinds we have right now, over and above the recession that we're currently seeing in valuation markets, and we'll talk about this a bit. But I guess the first thing we should probably ask, right, and Lloyd, I'll start with you. Is it challenging to invest these days in the gaming industry?
There certainly are the exact type of challenges that you're describing, particularly in the US now with the failure of Silicon Valley Bank, First Republic, and others that were especially kind to the gaming industry previously. And now many gaming industry stakeholders have had to go through the arduous process of onboarding to banks that are just a bit less friendly to the gaming industry. All of these challenges are quite unfortunately frequently experienced by investors like yourself, us, other people in the building. However, I do think it's worth noting that just as when you are a startup and there are barriers to entry that make it difficult to enter an industry, those barriers then become your moat once you have overcome them. Being an investor that is willing to go through that process perhaps offers the silver lining of making you one of only a handful of investors that is able to invest in a fantastic company like iGaming NEXT or like other high growth, highly profitable companies. So Perhaps it is the lawyers with the billable hours that have made out better than anyone, but I do think it is always worth noting that when there are massive barriers to entry, barriers to investment, being an ultra-specialized firm that is willing to endure those, go through the AML process, the licensing process, it becomes a competitive advantage in a weird way. And I think in the long term, it allows you to invest in companies that have growth opportunities that many others are not able to pursue.
Yeah, I tend to agree with that. I think depending on the life cycle of the business, the more credibility you have in later years in your life cycle, the easier it is. But then you end up with this whole catch-22 situation, right? Where you can't get funding if you're a startup. You're not going to get a startup, so you're not going to get any funding. So that's the biggest challenge. Alex, what's your experience? Obviously, you have a very different company at a very different stage, but it's keen to understand what your perspective is.
No, I'm running SKS365, which is a gambling company with a flagship brand, Planet Win 365, focusing on the Italian market, where we're holding both a retail and an online concession. And Julian, as you were saying, we have been experiencing that for many, many years. You always have to go through all these kind of processes because holding licenses, holding concessions, having proper banking accountants nowadays in place, payment providers, and certainly you have to fulfill all these kind of due diligence processes. And I'm remembering back in time going for a license in the US, it was not only me that had to go through the license and the company that had to go through the license and the UBOs. I also had to fill out all the forms for my kids and my parents, which certainly were not in the age of running the business.
And 20 years of bank accounts, because we all keep them, right? Martina, obviously you're part of a startup I'm invested in as well. You're the CEO. I think you've done a fantastic job in turning the business around, but I know it hasn't been easy. Give us your perspective.
Well, for sure. I also have 20 years of experience from the banking and finance industry, and I think that we are seeing when I started in the banking and finance industry, it was almost as this industry is now. It's under development and it's maturing, and of course, being a startup where you have to show your KPIs, you have to show your growth quickly. This is extremely important to be able to find the best investors. And we're super happy to have YOLO on board that have supported us in so many ways. But of course, it is a tough landscape, but I think that we have also been in a boosted economic landscape. So I think that we're maybe back in more like a healthier environment right now, where all of us have to adjust. And when this is happening, you will also, in 2 years ago, it was an economic landscape where almost everyone could get funding and money. Now we're seeing a shift in that, so it will only be the strongest and the most adaptive that will survive going forward. So I think it's also a healthy development.
I'm seeing more failure rate in startups today than I saw 3 years ago, and that's a challenge. In a way, it's good because you get the filtration process of some really good startups going up. But I have a lot of distressed companies who are like, please, we need a bridge. We need a bridge. And we're like, okay, at what valuation, right? And it's not going to be Hint, the same as it was a year ago. Christopher, your experience, obviously you're in the esports industry, so I'm keen to get your perspective on how that vertical is faring.
Yeah.
I haven't done well in esports, by the way, just so we're clear, because I'd like to hear a success story.
We'll talk later. So I would echo what the previous speaker said. We went through this exact stages that we're talking about. So last year when we had iGaming in New York, we had actually just raised 6 million, which was handed to us very easily, like from Davis, whoever knows him from Las Vegas sense. They didn't really ask many questions. They were diligent, but they didn't ask many questions, so we were just giving that money, basically. Then Las Vegas Sense went away, and kind of we felt that turning point. And we were able to raise another 3 million at the end of the year, but we already we had to give a little discount on the share price.
Yeah.
And now in the current funding discussions that we're having, we're hearing the word profitability a lot, right? So it's exactly those stages that we're talking about. And interestingly, I had this quick conversation with Lloyd backstage. And maybe that's because I also come from banking and was an investor for a family office for a while. I actually think this is a healthy correction. I think if we go through these pain points right now, we will be much better off in the future. So if I give an example from base, it was basically a company that was formed by some gamers that were getting together, like to make it very plain, who were playing games, and they formed a company. So you have a certain type of people in that company, and you also have certain processes that are not in place. And what I've been focusing on for the last 2 years that I've been there, 1.5 years, is make these processes, these internal processes, to show these KPIs much more professional. And I'm already seeing that this has an effect on our clients and as well as on our content partners. So I actually think this is a healthy correction, and in the end, we'll all be better off.
Yeah, look, I think we're going through the paranoia phase right now. So we've gone from 3 years ago, massive valuations, right? You can raise so much just on a PowerPoint deck, right? To the point where people are like, okay, you got product, but you pre-revenue. Don't worry, we're going to focus on growth, right? Growth is a euphemism, right, for VCs. We don't really care about profitability. We just want to make sure that we're going to hand you over to somebody who's going to pay more than what we did, right? It's classic rally race. When they talk about profitability, then you know that they're worried, right? Because I talk about profitability, because I'm worried about my net asset value, right? My NAV. You don't get a good net asset value, your investors, your LPs are going to be worried, right? So you get to that stage right now. I think we're in the final stage of correction, right? I think we're bottoming out in valuation, right? And at some point we're going to rise. But I agree with you. Right now, most investors are focused on profitability rather than growth. John, you have the complete polar opposite, right? You're a publicly traded company. Keen to get your perspective.
Well, the reason we originally looked at a public sort of raising of capital was addressing your first point. So as a financial institution, in order to get those relationships with other banks, correspondents, regulators and so on, we actually look to the public markets to get ourselves listed, get that transparency as a public company initially. And of course, as everyone should know, it's simplified due diligence if you're a listed entity. And we liked the process so much that we actually bought a stock exchange. So we now have a tier 1 stock exchange as part of the group, and we are fostering companies to come through and use the same approach. Now, the advantage we think, particularly for gambling and regulated sector businesses, is that by raising your capital through a stock exchange, you don't go through everything that you just went through.
It's awful.
Right? Because
seriously.
It's all transparent.
I do not wish it for my worst enemy. You do not want to go to...
It's absolutely terrible. And, you know, all of that transparency then works in your favour. And it's not that much more pain. So what you're actually doing is going through a process of actually regimenting yourself to get it all done up front. And once it's done, it's done. You're not doing it every second week for every third person that comes along.
Yeah.
So we think that particularly for the gaming industry, it's not an area that has been properly explored or well explored. The stock exchange that we sort of own is in Australia, and Australia, of course, is a very large betting market, and you know, it's a very natural home for gamers to perhaps consider taking an alternative route to bring their investors to actually use a public market, you know, to achieve these sort of AML and other compliance issues.
Yeah, fingers crossed, right? We'll see the back end of this. Look, I get it. Malta is a good example of this, right? 2 years ago, Malta was grey listed. We went through all this process of fact-finding and things, which actually wasn't really about the audit process. It was just about making sure our UBOs had proper names attached to them as opposed to some shell companies. But I think now we've gone proper wacko, right? We're doing a lot of things, and the big fours and all audit companies are getting massive billable hours, right? Let's be clear about it. For what, right? We're just delaying the process of getting cash, right, to some cash-strapped organizations like startups, which actually has another trigger effect, and I want to talk to you, Lloyd, about this, because you're an investor early stage, just like I am. This has an impact on valuation, doesn't it, right? And what are you seeing valuation-wise? Are we going up? Are we going down? Are we leveling? I'm keen to get your perspective on things.
Certainly on a revenue and EBITDA multiple basis, the peak for valuations was about mid-2021, and those multiples have declined significantly as the whole world rotated out of growth assets and into value, especially through 2022. Since the start of 23, especially as people have begun to take signs that there may be inflation and interest rate relief on the horizon, and especially in the US, as operators have demonstrated a path to profitability, we've seen valuations and multiples start to rise again. DraftKings is up about 115% year to date. I don't think we will ever reach the multiples that we saw in 2021, but...
No, with DraftKings, that's for sure.
Not on a multiple basis, but on an absolute valuation basis, not only are we seeing the total addressable market expanding, but we're seeing hold rates and margins expanding.
Yeah.
Now, the private markets, and earlier you get, have always lagged public markets significantly.
About 6 months, roughly, right?
I would maybe say at the pre-seed or seed stage, even more, perhaps. But yes, certainly at least 6 months. And so one of the challenges deploying capital today is that investors who are perhaps more attuned to the financial markets than founders who are building every day, we have adjusted our exit expectations and made corresponding downward revisions to the entry valuations that satisfy our return criteria, but founders perhaps have not done so. And founders who dedicate their life to their business, they tend to tie their personal identity to the valuation of their company. And it can make negotiations quite unpleasant. And when I'm looking at a deal, and I know YOLO's looking at it as well, I kind of figure, let them deliver the bad news to the founder so that they can take the heat and I can benefit from the valuation reduction. And so I certainly think it is quite complex. There also is a reality, whether it's justified or it's groupthink, that VCs do not like down rounds. They seem to convey a lack of progress. And so the very same company, take company X with the exact same unit economics, trying to raise at a $25 million valuation today. If its last round was at 10, it might be easy to do that round. If its last round was at 50, again, same company, same unit economics, it's really difficult. No one wants to participate in a down round. It takes more work and more justification. And so I definitely think we are seeing a lot of startups in distress or perhaps on the heels of failure.
For the wrong reasons. Yeah.
We're seeing founders who were able to stick to it when everything was moving up and to the right, but are having a harder time. Not to be crass, but as you put it, there is a bit of a natural filtering event occurring where the startups that survive this period are perhaps the strongest. But we definitely have seen valuations peak and then probably reach their trough in the public markets. I think you're right. We're about at the point where valuations are probably bottoming out, and we're seeing investor friendliness at all-time highs, not just in terms of valuation, but investor negotiating leverage, liquidation preferences, anti-dilution rights, board representation, and things of that nature. But as many people have pointed out here, although of course it has been painful for those who have seen value and valuations destroyed, this all likely is healthy and sustainable and was quite necessary for ensuring the longevity of the whole business.
I agree. I think we need to purge some. We need to burn some, right, to make some. And we're at that stage right now where some startups need to fail, right? We've lost a couple of startups last year, but we were proud to lose, right? Just like, hi, I don't like taking the loss, right? But if this is a poker game, I'm happy to lose a couple of hands, right, and play the long game. Alexander, what's the challenge in raising today? Are you finding any challenges at the moment?
No, we don't see any challenges in raising any kind of funding because we have a strong story as SKS365. We are a highly profitable business. We have our own product and customer experience that we are driving further. The business is super healthy. The outlook for the next 2-3 years is even more healthy. We have a lot of untapped growth opportunities. And most of all, and most importantly, there's a very strong and resilient team behind it that is driving that growth over the last years and is committed to drive that growth even further.
So I want to ask you this, right? Okay, so you have a business that's growing, right? Everyone's happy, all the numbers are green, right? Surely your investors now are asking you about a liquidity event, right? They're telling you, okay, are we presenting ourselves? How challenging, and I know because I get that all the time, right? How challenging is it to push away, right, predatory investors to say, well, you need to sell now, so we'll bank what we make, and actually say, no, you need to play the long game. Do you have these kind of conversations?
No, these conversations have been going on always, and as we are very known in the industry as a company, and there has been shown a lot of interest over the last years, and that's going on a constant basis. And then it's a discussion with the shareholders where we're standing today, what is the outlook for the future, and then at some stage maybe there will be a different mindset, but it's good to be in that comfort zone when a lot of companies are actually coming and showing high interest versus you have to seek out.
I agree with that. Martina, where's Triggy at the moment?
Well, I'm hoping that we could make the same press release as Pierre just did shortly, but also like part of this of the topic is one of our investor is a crypto investor, and it's a difficulty to accept crypto with banks, know your customer processes, and so forth. So we're really in a discussion with the bank right now how to accept this in the best possible way.
I'm hoping on that note, right, that we will reach a stage specifically with crypto where there's a whole seamless KYC process, right? PayPal had to go through this, right, 20 years ago. So it's not the KYC process for a new tech is not something relatively new. But as long as we can commoditize the KYC process for what essentially is either crypto or let's call them alternative payments, then it'll be easy to accept funding from whatever source, if you agree.
Well, exactly. And I think this is like, I think we see great innovation with this area right now. Many like fintech companies that are really focusing on getting the pay and play process in a much better way, but also like the KYC process. So I think this will be important from an innovation perspective.
And we give accountants less billable hours as well, which is always a good thing.
Always.
Christopher, your perspective.
Well, I would think, so for the esports industry, the problem is that it needs a lot of education before investors get into it, right? So there's a lot of education to be done on the content partner side, on the client side who use that content, especially around integrity, and I know there's an interesting panel about that tomorrow here. But I could talk for half an hour about integrity. That's a big issue for us, so there's an industry dynamic that we need to tackle. And from a company perspective, or most of the companies in the esports space, it's that profitability, right? So, I mean, everybody talks about the outlier event, COVID. Esports was heavily affected by it, as many other industries, but there was a strong growth. And now you kind of need to educate everybody who's in that market that this was not the baseline from which we're starting now, right? So there needs to be this correction. And for us as a company, we need to raise a bit of money and not give up too much of the company along the way.
Okay. Haircuts are always going to happen, right? On valuation, you're going to get to that stage. And how much founder capital are you going to sacrifice, right, and equity to make sure it's still worth the while for the founders to have skin in the game, right? But then at the same time, you're still offering enough on the table to get there. For a startup, it's a challenge. I've had my own startups. Some have failed ludicrously. Some, thank God, have done reasonably well. But the challenge is always the same, right? It's the optics. It's preventing that. It's making sure that you can grow and organically, right? Where it's always conjuring up that image of reassurance, right? Maria had this speech earlier on, right? On the one-on-one as a CEO of a company. You always have to do that, right? The optics are there. You have to conjure that. And that actually helps with valuation. John, obviously you don't have these challenges, but you do manage payments, right? I'd like your insight on payments, where the industry is heading, or at least what your thoughts are, because I actually think a lot of solutions down the line will be solved with an innovation in payments or some form, right, of automation that allows money to go faster from A to B, if that makes sense.
Yeah, sure. So I mean, picking up on some of the themes here, and in particular KYC, we are very much getting behind open banking and the full orchestration of open banking. So it's not really enough to just be yet another open banking initiator, and there's a lot of those around. We see that the industry should be moving towards full service. So, for example, we provide bank accounts for our customers. We provide notification services when money has been received. We provide KYC services. So whenever we KYC a customer onto the platform, we can share that KYC with the explicit consent of the customer. And there's a range of things that we do to help the gaming industry facilitate or streamline or actually just do what they do best, which is the gaming aspect. Now, it's difficult. I mean, we have to negotiate with various central banks to get access to rails, to get settlement accounts with central banks, open up our own bank ID codes, issue accounts to customers. It's not an easy thing to do. And there's very few players that actually do the whole lot. But we do see that when we actually deploy that sort of solution to our gaming customers, that their number of transactions rises and rises steadily because it removes the friction of onboarding and then on play.
Yeah.
And that's a big deal, obviously, for everyone.
It's interesting because I do see that as one of the enablers. Another one is where crypto lies in all of this, right? Because there's a lot of uninvested capital purely coming from the cryptocurrency market, right? But for various reasons, right? It can't touch what essentially are white assets right now, not unless going through a whole cavity search. I think that and having some sort of automated OTC brokerage should hopefully help. Fingers crossed. It might be one of the innovations, which I guess leads me to the next question, right? What's the next 12 months going to look like for the industry, right? We know I agree with you. I think we're flattened out in terms of valuations. I think we're slowly starting to rise. We've seen some acquisitions in white markets where we know that the valuations are starting to go up. What does the next 12 months look like? Lloyd?
Yeah, it absolutely seems like the future is bright and things are heating up on the M&A side. Neo Games being acquired by Aristocrat for 1.2 billion US, STS for close to $1 billion US by Entain, several others in the mid 9 figures. DraftKings and Fanatics currently in a bidding war for PointsBet US assets, and I think we will continue to see that. As I think has been covered quite well here, there certainly will be some startups that are not able to make it through the filtering event, but those that are, the future is bright. In the U.S., sports betting gross gaming revenues will grow at a 30 to 40% compound annual growth rate for the next 5 to 10 years, regardless of whether there is a recession. Lottery sales are positively correlated with unemployment rates. There are a lot of very strong secular tailwinds. There are new geographies that are opening up, Latin America, Brazil in particular. So I think we will see what we have already seen, which is a bit of a flight to quality. Investors still have dry powder to invest, and although the majority of startups are struggling to raise money, those few high-quality assets, perhaps as was described here, that are highly profitable with high growth rates and strong teams, they are perhaps actually commanding even higher valuations, or at least have stronger negotiating leverage than in the past. And I think we will continue to see something of that. Perhaps another way to put it is that a few years ago, if there were 5 different investment firms and 5 different companies pursuing a particular business model, each investment firm might have chosen one horse to back. In today's market, we're seeing all 5 investors get together and anoint a winner, if you will. There were 5 investment firms nominated for the EGR Investment Partner of the Year award, which YOLO, of course, won, and we were not as fortunate to have won. All 5 of those investors are on the cap table for one of my favorite companies, Kiro Gaming, which is probably here somewhere. And I think that's a great example of the movement towards coagulating around higher quality assets.
It's the wisdom of crowds. So yeah, might as well share some information here. What I am seeing is we are collaborating. There's more collaboration. There's more sharing of info. Whereas even 3 years ago, VCs were really secretive. You're not going to touch my secret source. I'm not going to tell you anything of who I'm investing. I'm investing in dark pools. Nowadays, we've got open Telegram and WhatsApp channels where we trade stuff. Hey guys, have you seen these guys? They're claiming about this amount of money, right? And they're still pre-product. And it's almost like we end up colluding, right? Let's be honest about it, right? On early stage businesses, because we've been burnt over the last few years, and actually shared knowledge actually helps us go. I see an issue with that, let's be clear, because at some point we'll all end up just drinking the Kool-Aid on a specific product, right? And I think that's, in the long term, is bad. But I think in the short term, I think this collaboration is really healthy. And I think that's where we go. Alexander, what is your view on the next 12 months? You see higher M&As, higher valuations?
You know, we have been seeing in the industry, particularly M&A has been strongly coming back by the latest deals we have been reading in the news in the last months. And I see that will be continuing. They're attractive markets. Lots of companies want to enter other countries in place. There's high appetite for regulated market. There's high appetite for profitable businesses, because we have been hearing over the day some countries are quite difficult and some kind of businesses are quite difficult. So putting something into the whole operations and as a profitable business in the portfolio is quite good. And then having also then a team of people that maybe can turn around something which isn't profitable today into something profitable, that's an asset itself.
Good. What's the next 12 months in the industry for you, Martina?
Well, I have to agree. I think it's stabilizing. US, like the coming 12 months, might not be as high as it was 2-3 years ago, but I see amazing development within Brazil, India, Japan, great markets. So I'm looking forward to following them.
Fingers crossed. Christopher?
I will again focus on the esports part of it. I think a bumpy 6 months at least, and maybe a recovery of 6 months afterward. And then I think for esports you need to take a bit longer view for the reason I mentioned earlier. There's a bit of education to be done on all sides. But yeah, definitely bumpy 6 months, and then we'll see.
John?
Absolutely. Sorry. I've absolutely no idea. So, yeah, there's all these sage people telling us that this is going to happen or that's going to happen. And, you know, having been a CEO of a stock exchange and looking at all the data and everything, and this is the way it's supposed to go, It hasn't been. I just don't know how to read it, and I'm not even going to try to read it. But there's still stupid money going around.
There is indeed.
We've seen some deals that just make your eyes water. And then we've seen other deals that go begging, good companies that appear to just not to be able to sell themselves in this environment. So I am hoping that it will get better, obviously, like everyone else. But the data is just too all over the place to try to read it for my book.
Perfect. I think that makes a lot of sense, and I agree. I think the next 6 months are going to be rough, to be honest with you. I think beyond that, I think we're going to start to see valuations go up. Beyond that, to be honest with you, it's a gambling decision. But hey, we're in the gambling industry,
Here we are.
right? So we do what we do. One last thing, we're already late, so I'm going to be hauled off the stage, right? But I have to ask this. Hot picks from all of you. You're backing Kero, right? What about you, Alexander?
No, I always go for the gambling industry. It has been shown resilient over the last years and will be continuing so.
Good. That's your hot pick, the whole industry. Good choice. Martina?
Well, I think everything within like AI and social will be interesting going forward. And I have to come back to the LATAM market. Now we're seeing many like international operators that maybe have the process, the structure and the tech, but maybe not the market knowledge that are entering those markets, while we see local operators that have all the knowledge, but maybe not the tech, the processes and the structure. So I'm looking forward to see the company that get it all right.
Yeah, me too. I'm backing LATAM. In particular, one of my investments, Caleta Gaming, I think is doing really well. It's growing and growing, but importantly, LATAM is gambling. Christopher, quickly before I get hauled off.
I'll try to be very quick. My hot pick will be a trend. So a trend that we've seen in other areas like golf, for example, but a very specific esports case where Saudi-backed funds with a big war chest are entering the market. They bought a big tournament organizer, ESL, and they combined it with another company, Faceit, and it's one of our main partners. And we can already see that the big money that is flowing from Saudi Arabia is it leads to a different thinking in the industry players. So I think it will be very interesting to see three things. That is the overall strategy, which we think is from the Saudis, that they're buying niche players that are very, I'm going to be quick, that are very good in their field, and they're trying to combine them. The second one is, will they be moving closer to betting, because currently they cannot. And third is like the social community aspect, like because esports community is very inclusive and non-discriminatory.
Very good.
It will be interesting to see how
that was a bite-sized recommendation. Thank you. John, final word.
I'm just going to take a punt and say the gaming industry as a whole, it will just keep going from strength to strength.
It will.
I love Lloyd's numbers or statistics there. It's the correlation between cyclical, anti-cyclical, good, bad. It's always on the rise.
I agree with that.
We love the industry.
Gambling industry will be resilient. We're all good on this, right? But importantly, I think we'll all find very interesting things to put our money behind, because that's what the industry is. We all like a little bit of a gamble every now and then. Guys, I'm going to get really told off at the back. Thank you very much for your time. It was absolutely a pleasure to have all of you. Well done. Enjoy the show, guys.
Thank you.
Thank you very much.
Thanks.
Alex, well done. Thank you. Thank you.